The nation celebrates the American worker tomorrow on Labor Day. And while the new jobs numbers for August offer good news, polls show a majority of Americans are unhappy over how persistent inflation is eating into their wallets, among many other key economic concerns. Joining us now to discuss is Jared Bernstein, chair of the White House Council of Economic Advisors. Welcome back to Fox News Sunday.
Always a pleasure to be here with you, Shannon.
Okay, you know, we always start out with the polls, which right now, you guys know, are not good for you. The perception of Bidenomics, the majority of people in our polling tell us they think it's making their lives actually worse. You say, stick around. You got to wait for the benefits to come. New York Times quotes Jason Furman, who once held the job you now hold, and he says this: it's difficult for the Biden administration to take victory laps over slowing inflation because wages haven't kept pace, leaving a typical worker about $2,000 behind compared with before the pandemic. So the truth is, people are worse off than before you guys took over.
No, that's not the truth.
Those numbers, is Jason wrong about that?
So let me explain to you what my good friend, and he's a fine economist, Jason, is doing there. So real wages are up. That's the first thing to be clear about. Real wages are higher than they were before the pandemic, and they're especially higher for middle and low wage workers. Here's what Jason
But for many months, they were outpaced by inflation.
Correct. So for the last 3 to 4 months, inflation, wages are rising faster than prices. Good news, some buying power for working Americans. By the way, we got to tell Mike Pence that June 2022 wants its talking point back. That is, he talked about inflation at a 40-year high. That was true over a year ago. It is down 2/3 since then. It was 9.1%. That's what he was referring to. Again, that's a stale, over a year-old talking point. It's down to about 3%.
Well ahead of when you guys took over.
And it's certainly not ahead of wages, and that's the key point. Wages are beating inflation. Now, here's what Jason did. Jason asked, what was the trend in wages in 2018 and 19 before the pandemic? And then he just extrapolated that trend forward. He's not the only one to do that. But what that does, it ignores the pandemic. It ignores the global supply chain snarling, leading to a global inflation. It ignores the deep pandemic-induced recession. It ignores Putin's war in Ukraine with its impact on food and energy prices. So, look, I understand that that's what economists call a counterfactual, which is an alternative history. I got to live in the real world, in the real history, and in the real world, real wages are beating prices. That is a very welcome trend.
Also welcome trend, good jobs report for August came out. But the truth is, every single month this year, the jobs numbers have been revised for a net downward revision in every single month this year. So what that means is hundreds of thousands of jobs we were told were created this year actually were not created. About 30% of what we were told was created didn't happen. So, you know, are people's perceptions, their reality, more in line with the data, with what's actually happened than what you're trying to portray?
So there's two answers to that. First of all, people's perceptions are not quite precisely what you say they are, and I'll get to that in a second. But second of all, I don't think there's any good way to massage the statistics that would get you to any other conclusion than that we have a very strong labor market. 13.5 million jobs since this president took office, 800,000 in manufacturing, the unemployment rate below 4% for an historical amount of time.
But you guys know, when we talk about those 13 million jobs, I mean, the vast majority of those were jobs added back from COVID losses.
No, I mean, we have had very strong job growth in this. It's an historically strong job growth recovery. That's not just COVID. That's not just the bounce back from COVID.
But about 10 million of those were
I don't think you could find an economist who would tell you anything other than this is a persistently strong labor market with exemplary job growth, providing great opportunities for American workers. I think the thing is that these revisions tell you something also very important. And we've had other revisions to GDP that took GDP from 2.4 to 2.1. 2.1 is a great GDP growth rate. That is a little bit above trend. You know, 187,000 jobs, that is a great jobs number for this point in this economic recovery. Again, what we've accomplished here is really important to recognize because it's pretty unusual in economics. The president said, I want to maintain the strong labor market while take down inflation, and that's exactly what happened. That's unusual, as you know. Typically, to get that much inflation reduction, you have to see some weakening in the labor market. We haven't seen that at all. That accomplishment is behind this fact that real wages are now beating prices. It's contributing to consumer spending, by the way, which continues to come in very strong, sustaining the expansion.
It's not without pain, though. I mean, as the Fed works on those interest rates, we're now north of 7 for mortgages. A lot of first-time buyers are saying they're just completely priced out. They don't see how they're ever going to own a home. People sitting on homes, they don't want to sell if they don't have to, because if they're locked in, in the 3% range, that's good for them. I mean, there are headlines everywhere that investment is down, the housing market is stagnant. That's a trouble spot if people think that they can't ever get into home ownership.
So look, you make an important point there, which is that most people, the vast majority of homeowners, are locked into interest rates that are well below 7%. So that's key. Now, as we've discussed before, our administration has a deep agenda for doing probably the most important thing in the housing market, which is increasing the supply of affordable housing. We've talked about a proposal we have to extend the low-income housing tax credit, LIHTC. We've talked about pushing back on exclusionary zoning. And it's something we're actively doing now in some of our programs. We've got these programs that are associated with the Inflation Reduction Act, with the infrastructure law, with CHIPS, that say if you want your bid to get accepted, tell us how you're going to build affordable housing in a key area, say near a transportation hub. We're getting take-up on those proposals. By the way, that brings me to something else I really wanted to get back to, and I think you want to go there too, which is this thing I said earlier about how people are perceiving the economy. You always like to give me your polls, and I get that, and those are real, and I'm not discounting them. But let me give you some other numbers. 82% support capping insulin costs for seniors at $35 a month. 81% support giving Medicare the power to negotiate for lower drug prices. 79% support tax incentives to create more manufacturing jobs. 77% support capping out-of-pocket costs on prescription drugs. These are all measures that are in place. These are the components of Bidenomics. So when someone tells you Americans don't like Bidenomics, it's false. Americans approve of the components above 80%. And that's because these measures are helping to do what President Biden has long sought to do with this economy. Build it from the middle out and the bottom up so that middle-income people have a fair shake at getting ahead.
Okay, so a lot of things packed in there. Let's talk about other numbers. That the average mortgage price that people are paying now is more than double than when you guys took office. We've hit a record of $1 trillion in credit card debt. People have blown through savings that they had during COVID. And 61% now tell us they're living paycheck to paycheck. Is that Bidenomics?
So some of this we have to kind of do some live fact checking here. So the average mortgage is not as you represented.
The payment hasn't doubled.
That's for people who got new mortgages. So the average mortgage, you have to consider the 9 out of 10 people who are paying have locked in a mortgage that's well below 7%. So the average mortgage has not at all gone up that much at all, because most people's mortgage hasn't changed.
But if you talk about people trying to get into low-income housing that you're encouraging,
right,
if they can't afford a 7% mortgage, they're not going to get into any house.
Well, this is why we need to continue our efforts to expand affordable housing. Now, look, we have to work together with Congress on it. Congressional Democrats are there. Congressional Republicans need to get there. I mentioned LIHTC. We also have a series of grants and loans, which I won't tick off the acronyms, but what they do is they increase the supply of affordable housing, and this involves purse strings. So we have to do this in a fiscally responsible way, meaning it needs to be paid for. In our budget, we have $150 billion devoted exclusively to increasing affordable housing. So if that's what we want, then both sides have to work together to get there.
I want to bring up something that we've talked about throughout the show today. This idea that the new funding request from the president involves Ukraine. $24 billion, I believe, is the estimate there. Billions more of domestic aid tied to that. Right now in Maui, the losses in that disaster alone are in the $4 to $6 billion range. There's been a lot of consternation from folks on the ground there about the federal response. Now this tying of the Ukraine fund to the domestic funding, Senator Rubio is among those who are saying you're holding Americans hostage. Why not split these two apart? The president says he won't do it, but why not?
Well, nobody's holding anybody hostage. What we're trying to do is address extremely pressing measures with this supplemental. I mean, I guess I don't, look, I'm an economist. I don't get why they're playing politics on this, especially when I hear overwhelming bipartisan support. I heard some of this from Mike Pence in your interview with him for taking these measures, for helping people who've been hurt by extreme weather events. That's typically not a problem for Congress, and it typically has, again, overwhelming bipartisan support. Same with support for Ukraine. So look, there is a group of congressional Republicans who can't seem to get out of the way of majorities on both sides, and this should be a no-brainer. Help people who've been hurt. You've shown the pictures today. They're compelling. We know what people are going through. Get out of the way, do the right thing, do your job, and pass the supplemental so we can get people the help they need and support Ukraine against Putin's brutal attack. It's that simple.
Herding the cats on Capitol Hill, as you know, is always very difficult. Jared, always appreciate your time. Thank you for coming in today.
Thank you.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.